Good morning, guys. I hope you can hear my voice. Trying out a new way to stream here on my laptop instead. If you can hear my voice, I would love it if you can just confirm that on the chat. But my mic should be working, and I've set it up just today. But welcome into the morning live stream. Hope you guys doing good. Um, let's see. Can you guys hear me? Let's see. I hope someone can hear me. Uh, Hello? Can you guys hear me? Okay, cool. Sorry, technical difficulty. Okay, great. Welcome back. So last week's continuation from the pre-market live streams. As you guys know, we have been covering a variety of different thematic approaches here. One of them being the idea that the S&P 500 is more front-loaded with gamma. Has been for a while, and market makers haven't really taken the edge off from that side of the market. There's been a lot of things that have energized this move to the upside. One of them being stock market buybacks, another being a strong rhetoric around AI and tech in general, right? And then you had a pretty good earnings cycle that recently happened, which is giving investors confidence to stay invested. And then lastly, you have a dynamic in which traders were all very scared to be left underexposed, or rather with too little exposure in this area, right? So it led to more buying, okay? And so all of this is just something has been developing, but the more important thing is we knew 5,000 would be a level at which we would come to eventually, and we are there now, right? So we can take away our targets. We can start to replan this entire cycle, and kind of look at all the different lenses in which you're going to look at this market. So. Now, last week I also spoke about one important sector, which was IWM, right? And through this sector, we had a lot of volatility. The market is still very quick to adapt to momentum stocks that have decent balance sheets, and then also to stocks that have shitty balance sheets. So IWM is one of them that helps you aggregate between everything. And if we see this volume shelf here basing in this dual zone is actually a pretty strong bounce area, or rather, if it turns into a bounce area, then above 205, this thing gets very, very bullish, right? So I'm happy to take some upside here. But with the S&P 500, the 61.8 golden ratio is at around 5,100, okay? So this is a very likely area in which we see rejection start happening, which is where we were calling for to begin with. As you guys remember, this is the area in which we have been looking at for potential rejection and to start selling calls, right? I said as we approach this area, now is the time where we can start entertaining the idea of selling calls here. And also, we can start to take off some of the profits on longs that we've been having accumulating positions on, etc., etc. So we are approaching that moment now. The thing about it is the risk reward ratio doesn't favor quite playing the upside here at all. So in other words, you're going for perhaps this much of upside for the S&P 500, and obviously if you can manage this kind of upside on an intraday setting or a scalp setting, then yes, absolutely, I would agree that it's worth it playing. But if you're on the swing side of trading things, then even buying at this level or just kind of trading in this level, it presents overnight market risk. So you, as a swing trader, this is a terrible time to bet on the upside because your risk reward ratio has been compromised severely. And even if you do try to make it such that it's in your favor, it's going to get stopped out many times. So you want to really just wait for this thing to kind of pull into it. And while you're waiting, the market's also going to wait with you, right? Which is the third thing I was going to talk about, the sector rotation between two sectors which we spoke about, right? The first was consumer staples, right? Which we have seen a little bit of a bearishness, and I spoke about last week. I'm not sure if you guys remember this. Let's see, how many of you here today? I wish this thing would refresh. But as I was saying, with consumer staples here rotating into potentially the consumer discretionary, which is what we were talking about here, Tesla would be the one that would benefit from this, right? Coming out of this. And that's why we were looking at the Tesla long idea from this bottom here, pairing it together with the discretionary sector itself, looking at the staples going weaker day by day. And then on this past session, trading session, we saw confirmation that staples were indeed weak. So now we have the ability to potentially play the entire sector, consumer discretionary, bullish, and then try and pick select names. Now remember, Tesla does do its own thing with relative to the market, so be cautious there. That's one thing I will say. Okay. Next up is AMD. This is a nice pennant style trade. These are always pretty decent or easy to trade. We'll talk about it as we develop this trade together. If you want to follow this trade live with me, when it breaks out, if you want to take it live with me, join the Discord. 14 days free. Sign up, join us, play the trade with us, right? And then see if the communities are fit for you. Okay, but you can join, you can get entry for free. So here we'll be looking for two primary breaks. The first break actually primarily 175 would be nice for potential chase upside at 180. So this would be an intraday trade if I catch the momentum. Downside, I wouldn't play until I get a firm break with volume, momentum, 169, and then confirmation needs to break further 165. But this needs to be retest first. So whichever way this breaks, it still has some time before I take the trade because it needs to validate a couple of scenarios for me. And I'll go along that, some other time. Tesla, we spoke about this one. By the way, if you have any questions, make sure that you put it in the comment section so that I can read them later. Hoping to be back with EGA in a couple months. Oh, damn. What's up, Mark? How you doing, man? Long time no see. If anyone's here, listen to my voice, welcome in. Hope you're having a good morning. Sorry if I'm sounding a bit stale. It's because I'm having a little bit of allergies, but it's all good. I'll be fine. The good news is my cough went away. But yeah, sorry, as we were talking about Tesla here, this big buy-up happened on last week, and we were talking about the possibility of this getting back up into that 196, which it kind of did. But now the thing is, this 196 is no longer looking like an attractive area where I want to take further upside. So this becomes a risk area in which market makers try to monetize the gap fill into a anti-liquidity grab that immediately relieves pressure, sends Tesla down into another liquidity grab down here. There's a possibility for this to happen. And then finally, after which both grabs are done, then reverse and send the price to the upside, right? And obviously this is for entertainment purpose, but it's also planning purpose, right? You got to know all the different scenarios that this is going to probably play out. So coming back up here is more important for me to see the retrace back to the 196 after it does indeed break out from this level in the future. So Tesla is a long while till I say take a calculated risk here. It still has to define what it does at the 197 pivot. It still has to show me if it wants to reject here, if it wants to break out here. How is the buyer-seller interaction here? Is it strong, weak? Market sentiment is still pretty bullish, right? NASDAQ sentiment is still pretty bullish. We're not going to go through Apple. We're not going to go through NVIDIA. We're going to go through a firm. This was a good one also. I mentioned this on the live stream last week. So we had a nice breakout. It failed to make new highs, came back down. Ultimately, I think that if it keeps holding the $45 level, this may have some nice decent move into the $53, $52 level in the future. So I'll be keeping a firm eye on this one because it's, once again, small mid cap, right? Roku is the other one. If it can, hold firmly above 98, which is now the new level, which I need key level. It needs to be above 98. Then I'll be happy to take some 110, 105 exposure. 105 exposure is actually perfect here, right? 105 calls. Let's say about 2 weeks out or 1 week out, depending on how expensive the option chain is and liquid. Excuse me. Man, these allergies. So next up is Etsy. This one had a little bit of buying last week, but you know what? I am now deciding skip this entirely. Very low volume. It's just very finicky. And the last one is Align. This has seen a lot of movement in the past, couple of weeks. It's been on a nice uptrend. It got rejected here at the previous high. If it can break this 307 level, it has a lot of potential upside to 330, 360, all the way up from here, right? So this will be one of them that I'm looking at. Especially so if we just do a retracement here. There we go. So this was the 50 level. The next level would be 322.70. So that's what I would be looking at on a firm for bullish continuation. This would be my pivot right now, and that's my bearish confirmation. So still a long way to go on this one to make a decision here. Okay, if you have any questions, comments, put them in the chat. What's up, Karina? How are you doing? What's up, Roy? What up? How are you guys doing? I'm going to review if you have any questions now, charts, anything like that, for the next couple minutes. And then we on your way to the next live stream on Wednesday. So I'll give you guys a couple minutes here. If you have any questions, go ahead, type it down, and we'll get that sorted out for you today. Now, overall consensus on the S&P 500 is that the market is generally a little frothy at the moment, right? There's a little bit of, I wouldn't say they're bubbles, but there are just some valuations that are stretched, which is within nominal, exuberance. Like it's not something that we've never seen before, so it's quite normal. We've seen prices of tickers within various sectors move up massively, semiconductors being one of them, Roy, right? And I think that it will eventually correct back downward to a mean variance, and that will be the new level baseline in the future, right? So in long story cut short, Roy, I feel that semiconductors are a little expensive right now. They are expensive compared to what they should be priced at. But it's not necessarily a bad thing because eventually they will come back down for us to buy more of them. That's my thoughts on that. Now remember, this year is a presidential election year. Okay, so market tends to outperform in years like this. Statistics is in alignment with years like that, right? So whatever it is, the market will end up higher than it started off this year. That's what I feel, at least. Thanks. Do you recommend shorting them? No, absolutely not. You never ever short something that's moving parabolically up like that, right? Because you never know where the top is. How do you know where the top is? You can never tell, right? So your best way to do that is you either own equity and you sell covered calls that are way out the money and keep rolling them, right? For theta gains, basically. Or the other way is eventually at some point of time when you have confirmation of a downtrend followed by a negative event that acts like a catalyst, like a market sell-off type of event on bad news or something like that, that's when you start to short. Because that's when you have momentum in your favor. Right now, there's no momentum or cadence in your favor at all, right? So you don't have a short sector that's that strong. Like look at XOXL. This thing is nuts, right? And it looks like there's still more room to go on semis. Not gonna lie. All right. Well, I don't see any more questions. I appreciate you guys taking your time out to be here. I wanted to keep it short today, so I'll see you guys back on Wednesday for another live stream, and I hope you guys have a good trading session. Last week was a pretty decent week for us at the EGA Discord. It closed out roughly about $4,000 in profits last week. It was not too bad. And yeah, this week let's see what we'll open up with and keep it going from there. In the meantime, take care, peace, see y'all, and yeah, bye Wednesday.